Good morning, greenies. Okay, what a wild market. Wow. I honestly thought possibly the market could hold on to that gain yesterday and it would have been a large enough reversal bar to consider a long. These earnings now that they've started, certainly as we've seen here, um, played a little havoc with the scenario of a turn here. And it's starting to look more like, the ultimate stopping point being the third scenario that I wrote about that I thought would be the least likely. Now it appears to be what would be the most likely. And we'll have to see where today goes here. I think, this is just a thinking point of view rather than looking at what the charts are saying. So in a sense, in that with Amazon and Google getting shellacked like this, how much worse could it be? I mean, we've got these midterm elections coming, of course, and whether that's good or bad, that's yet to be seen as to how it turns out. Either way, historically, the markets like it better when there's stagnation. So I suppose a more democratic win, the market might actually like it. But we'll see. Well, who knows? We'll see how it turns out. The market's been a little unpredictable to a sense. Anyway, so assuming it goes down to that level, what's going to drive it down there? I suppose more bad earnings, or are we going to go back to more tariff news and sanctions? Who knows? In any event, our internals, we'll take a look here, are in an area where we have to be thinking buy. We just don't have a price pattern set up just yet. But with Amazon and Google disappointing, Intel was okay. I mean, it's up almost a point here. We'll take a look, or Dan can take a look at some of these gappers. But I mean, even if Facebook comes out with bad numbers, it's already been smashed. So I think our downside target, if prices are going to go down there, are ultimately going to be where we look to get longs. And just considering, we went over the measured move scenario, which would put prices down in this area of support, give or take. It's always an area, right? We've got this low here and this low here. This looks like a continuation pattern, and prices are at 266. They've been close to 264. So a gap down below here suggests more selling, and lower. The hourly chart is in a downtrend. However, one of the things, let me just point out here that we always have to look at things objectively, right? Meaning we have these targets, we have thoughts as to where prices are going to go, and we always have to look at the chart and what's happening now. The trend is down, right? Obviously, lower highs, right? Lower lows, yada yada. However, this drop and reversal just barely took out that low. This, you can see the momentum here. Yeah, Jerry, that was actually my fault. My computer was acting up and I couldn't see what was happening in the room. So I had to, and I pressed the wrong button rather than exiting myself. I exited everybody. So that's why that happened. It wasn't on your end. It was on mine. Sorry about that. So this had pretty good momentum, right? This move down had momentum, but not as great as this. And it just barely took out that low there before it began to stabilize. Now, that doesn't mean it's going to take out that high. What I'm pointing out is just to recognize that what's happened here was that there was slightly less momentum to the downside on this drop than there was on this drop. And any of you looking at indicators, that's why your indicator is showing that higher low there, just to understand indicators. And if you learn how to look at price, these are unnecessary. And the more that you can remove from your thought process, the better off you're going to be. Now, let's clean that up. And Let's see. All right, so our downside targets are internals, which we will take a look at quickly here. So a bit more selling, and that should get sentiment down into the static 1.2 level. This is already down to a bullish level, got down here, so now it's diverging a little bit. Odds are this comes a bit lower. So in any event, we're already in this area. There was some put buying at an extreme the other day, and now we'll probably get some more of that today. The Qs tried that reversal, and it was closer to the high, which was looking pretty convincing for a turn here, and relatively close to this prior low. And it's the same scenario here. Big momentum, fast drop. The next drop, slowing momentum, a turn. But now earnings have got prices down here, 164, 165. So gapping below this area, bearish gap. Things are pretty extreme, but we've got a void below here. So we'll just have to see, how things play out. The day that we had the turn, this day when it had gapped down, it took almost 30 minutes or so before the market stabilized, and then we got some kind of a rally from there. So day to day, it can be different, but that day it took about 30 minutes before there was stabilization. And there was a break to the downside, and then it reversed. So there was that shakeout at the time. So always be aware of shakeouts. Russell actually holding up better on the gap, less affected because the small caps versus those big stocks that were reporting, but its time will come. It's already down a whole bunch, and while momentum is slowing as well, there's no clear sign of a turn yet, but it's already down to its support level relative to that prior low. Transports smashing through it. Bad sign for the markets, I guess intermediate term. And our focus right now is more from a short term or in days and weeks of a turn when it actually happens. And the continuation of this move lower is going to be very different than the anticipated move of a W type of a bottom. Meaning when it does begin to turn and we get what I would call the event to go long, it's going to be from a more of a climactic buy point of view. And those, by definition, have shorter times to focus on getting a profit because there's going to be a lot of people in pain. There are a lot of people in pain. That's a fact, that don't adhere to stops, that had no plan, that now questioning their long-term view, which has not been shaken to this degree in the last several years. So there's going to be sellers. And just by definition, any climactic buy is one in which we participate, it reaches some resistance area, we take the money, and then we repeat and look for this type of a pattern where prices after the climactic move up, just like this was. It didn't get very far, but you take your money and you wait for the retest. And we want to see where there is a shallow retracement, not a big one, right? To set up the highest probability setup to make the most amount of money, which is a retest after a shallow retracement. And then you get your setup, and then you have the highest probability of getting through that swing high and then going higher from there. But these transports getting smashed like this suggests that they're on their way down to this lower level here. What are they doing here right now? Actually up, looks like they're up a little bit. So a lot of times what gets smashed first gets hit the least. Doesn't mean it doesn't get hit, it just gets hit the least, as opposed to the leaders that were holding up get hit the worst. And they play catch up. Right? We've talked about and traded setups that were catch up on turns to the upside. Well, it looks like the leaders now are going to play catch up to the downside. And then we'll look for them to set up in alignment with each other, or the ultimate buy setup that will come. Interesting here. I don't know if that's real, but was lower and back up again into this pre-market area here. Well, we'll take a look at the futures, but that's holding up relatively well. 247. No, it's gapping down. 247, 248. No, it's inside bar there. That'll be interesting. We'll see where it actually ends up. But we'll take a look at the futures, which I'm going to look at right now, since to see what it's actually must be real. And so there are the futures pre-market trading here, and getting this retest. So that's something I'm going to have to keep an eye on here as markets open, is to see, the NASDAQ, which is going to get hit the worst because of Amazon and Google. And this holding here right now, it could hold things up a little bit. Right? It still looks like it's going to go lower. And the scenario of a move down to 24,000 that I wrote about on Monday looks like it's going to be in the cards, but it's going to have to clear these lows here. And then when it gets down there, and hopefully, it probably won't be, let's say, by next week, but who knows? It could be today. This could be a 1, 2, 3 extension to the downside and be down there today. Well, 10% was needed normal. It was about, I'm not saying it wasn't, George. It just seemed to come out of nowhere. Sure, there were, some sectors that were underperforming, but that was the case all year. Meaning consumer staples were in a downtrend on the monthly time frame. You had a lot of like financials going sideways. Then you had retailing actually outperforming for a while, and then they started to deteriorate. But the markets were up, making new highs. Our internals were okay. The S&Ps and the Qs were knocking on the door of new highs, and then interest rates popped up on that day where the markets yawned. They did nothing. And then the next day, the selling started. So, this is a very odd scenario as far as this sell-off coming and the extent of it and the continuation that's coming here. So, markets always change or, teach you something new. And then, so now that this is here and the charts have been damaged, and when charts being damaged, okay, we have a daily chart damage, okay, fine, and then we go through the process. Well, what about the weekly charts? And yes, we're pushing down under this major support level here, which suggests that 24,000 level or down here. So ideally, it gets down there quicker and comes down there and starts the rebuilding process, and we'll just assess it as it comes. That's what we do. NASDAQ futures breaking through that level, breaking through this level. Right? So quite a lot of damage. Looks like it's coming down to this next level. And just remember what I said, climactic setups are short-term, where you get in, you ride it up a bit, you get out and wait for the retest. And this is, what happened down here, right? It just happens in different ways, but it's always the same, if you get what I mean. Meaning there's always some type of stabilization within the markets, and how it looks, whether, it looks like this or whether it looks like this, whatever. We'll figure it out as it sets up. So you can't get hung up on it. It's got to be this way. No, it doesn't have to be that way. It can change from one market environment or another, or a different stock. And so that's what we have to do. Like I said, if it was so easy, everybody would do it. That's the saying. Right? What if we get a climax? Again, I guess you're answering a question.
No, I was asking you. I totally am wanting the climactic setup also, and then higher low to get a lot more confident for a bigger move. But no, my question is, what if we don't get this climactic?
Then a different setup will happen. I mean, whatever it is, we read the chart. And just like I changed my opinion as to the W pattern and we didn't get a setup to act on it, something else will happen. All right. So this may go sideways here, you know, this may gap up above this bar. It may begin to build. This is the power of the things that we teach, you know, trend, support, resistance. There's a void. The void says it's going down there. Really? Well, yes. Well, what if it forms a pivot that has created new support that wasn't there? If that gets retested, it's created a larger area of support. So bar by bar analysis will tell you to change your opinion and what's going on in the moment and what to do. So what if? No one can answer what if to in an ultimate sense, but we have the tools that tell you that this is what's happening right now. And because of what you thought in the past, what's happening in the present doesn't suggest the past is now going to happen. So move along. So we have the tools to do that. And that's the great part of what we do. We have objective tools based on price action to tell us, change your mind, Greg. What you thought was so perfect setup is not happening this time around. So do this.
Exactly. That answered it.
And so NASDAQ futures going down. They popped up here a little bit. Looks like they're going lower. And so look, somewhere down here, and I'll just drag this up because somewhere down there, we'll see. We'll see. You know, right now it looks like that's where it's headed. There's no sign. There was stabilization yesterday. Prices were higher. Right? Turned into a topping tail, and now it's breaking lower. Now, if we end today, right? So, okay, what if? What if we end today and this bar looks just like that? What would be the next thought? Thinking ahead of the pattern based on historical patterns.
Lower.
You know, I would think, you know, what would the next, I can tell you what my thought would be. Possible breakdown bar failure. What would we need for that to happen to prove? Inside bar, trade above the inside bar, go long, short term against the trend. If it's a wide range bar to the downside, keep thinking lower. So bar by bar analysis is one of the most powerful concepts to keep you in touch with what's happening. But one concept by itself doesn't mean a lot because you have to understand, well, you know, the other pieces and put it together. But that one is, you know, extremely powerful concept. Okay, let's continue. So we're getting late here, but I mean, things are pretty much the same. Bonds are inching up. You know, nobody will get out of equities, go buy bonds. You'll be okay. Oil stabilizing here. It is into some support, but no event to say it's going to go up because when it tries, you get topping tails. Gold just grinding its way up there. And, you know, that's about it. Take it over. Amazon's getting shellacked and a few other things here. So see how it turns out.
All right. Good morning. Thanks. Yeah. And, you know, I even particularly for our new subscribers of our advisory letters, we're actually flat right now in both our regular advisory letter and the weekly options trader. Yesterday, with the bullish gap up, we were focusing 100% on day trades, bullish day trades, and that worked out great. Both gap trades, relative strength trades. We had a nice afternoon breakout here at 2 p.m. reversal time, or 2 and 2:30. But it was a counter trend rally. There was no reason to enter swings. And as of right now, I'm going to have the same bias today. The first 30 minutes, I think we're just going to be in wait and see mode unless something very unique sets up. Today is Friday, of course. I love selling expiring options on the same day. So that will be my you know, kind of bias, but I don't have any of interest yet. Maybe Intel from relative strength. So it gapped down, negated it, went through this closing 15-minute resistance, and this looks great. So this is what I call a tier one trade. A tier one is those that are the most ripe, RIPE, ready for entry in the opening session in the first 5 or 10 minutes to make sure my bias is going to hold. I'm still not interested in swing trading this, both because of the pattern of Intel and the broader markets. But when we have earning stocks and volatility rising because the market's gapping down, so the VIX is going to gap up for 100% certainty. And so this is a great environment to sell puts that expire today, and that's one of my favorite strategies and those in our weekly options trader. All right, so we're flat, so I got no open trades to review. I'll just start here at the bottom and go up. AKS, wow, yeah, the steel stocks, the XLB materials ETF has been under tremendous pressure. And this is gapping. This is a bearish gap breakdown on the weekly and monthly. And this was a one bearish 1, 2, 3 setup. I mean, this poor little thing on the monthly, I mean, it's a big gap. It's there to 350. It still looks lower, the poor thing. Adobe did this. We had, if this did not have earnings, well, let me take that back. This week, the MT Live last Wednesday, I encourage you to go either to our mastertrader.com under the resources tab or YouTube and watch that video. It's phenomenal subject matter because there's the information you're going to be able to use right now and in the coming days in trying to find these reversal patterns. But this is a very nice W reversal. There's many concepts going on here, which I don't have time to get into, but it broke the lows. It was climactic, had a deep retracement to resistance, negated this red bar yesterday. Right now it's gapping to 243 though. So that's a bearish gap on earnings. But let's say hypothetically this were opening relatively flat, up a little, down a little. This would be a phenomenal put spread trade. What we would do is go out either today or even next Friday and sell the 235, 230 puts, just banking on this double bottom holding. SCG, very sloppy, 39 bucks, no pattern. I'm going to go through these fairly quickly. Rare, and all I'm doing is looking at this pre-market pattern, grabbing the price there, 51 bucks, and then marking it off here. Very, very bearish gap. So I need to come to my weekly chart to see where that's at. It's into a cluster mess, no interest as of now. At the 10 a.m. reversal, we will come back and look at all of these to see if they have set up for us. 52.50, same thing. Wow, that is pain. Look where it's gapping to. Now, wow, that's from $84 last month. 84 to 52. Wow, that's some pain. STX, I was just looking at because WDC reported earnings, and I always like looking at the major cousin or brother, I call it, 38 bucks. So see, that's a nasty gap along with Western Digital. 47, that's a nasty gap. Look, I have to come to my monthly and it's gapping right there. We'll take a look at it in 30 minutes. Just because time's getting short, let's go ahead and take a look at these other two leaders. Google and Amazon were the ones that sent the the stocks and the Qs yesterday in a free fall when they announced their earnings. Slopping around here at 1054, market off. So it's gapping, you know, under that bar, no pattern, nothing to do right now. Amazon. Whoop, that's not Amazon. 1650. It did. You got some bottoming tails here, so it's trying to get its sea legs, but now it looks like a little breakout failure. 1650. It's also gapping under here. We are not rushing in to anything today. Look at that. That, you know, we went over this in the green trading room yesterday. When this traded over Wednesday's high, this ugly red bar, that's what's called a bear trap. And I even remember asking the folks, I said, hey, guess what? What if it gaps under yesterday's low tomorrow? That's now a bull trap. So in the overall, there's no pattern here, but it's just showing you the tremendous volatility of these individual bars and the heightened volatility and risk. I'm looking at my other screen here, and there's buyers coming out right at the open. No pattern there. Spiders, IWM. Amazon looks bullish on a 5-minute. Oh, well, this is my 5-minute. Well, I wouldn't say that yet because that's a small little breakout failure right there. I am not rushing into anything. Bravo Charlie still looks lower, no reversal. Whiskey Yankee gap down to, you know, it's a mess here, nothing to do. I'm looking for the best setups. That was a climactic and it gapped up, but pre-market it's just bouncing around. Goodyear Tire, nothing. Charlie Lima, that's bearish, maybe 30-minute low. There's some pre-market support right here, but that's a very bearish gap under support, topping tail. So step 2 is I want a more compelling intraday setup. Here is in a weak market, right? This is a bear trap. Oh no, I'm sorry. It hasn't even